for a while. Mayuresh Joshi, fund manager at Angel Broking, is now joining us. Mayuresh, good afternoon. What do you make of Escorts Limited? Now, Escorts is up currently about 18% right now. They sold their automotive division, which is a single-digit contributor to their entire volumes or their sales, but it's a loss-making business, and it's not the core business of the company. Do you believe that's a very big positive? Investors will now look at the company in a much different way?
So again, I think, Pankaj, before that, I think a disclaimer, not a buy or a sell recommendation on this one. So again, I think the division that they probably sold at this point of time, it again was creating some amount of cash burn onto their books, and though not a big contributor in terms of revenues, I think the core tractor business has been doing exceptionally well because of monsoons coming through. And the expectation generally, if you see even the M&M management commentary on the tractor front on the farm equipment business, is extremely robust. So my own sense is that the tractor business should start holding up for most players within this space. But specifically for Escorts, I think this division was loss-making, so to a certain extent, I think they are following or pursuing this strategy of following their core business and probably strengthening going forward as well.
Right, selling a loss business, selling a business which is not really picked up, or you would have started with expectation of great growth but it never happened, will always be taken positively. It can be a re-rating event because ROEs change, going ahead sustainability of business change, the cash flow that you get is invested into a business that you are probably seeing growth.
So again, I think it really depends from company to company and what kind of proportion that business actually contributed. So again, I think if you look at the kind of divestments that are happening in the Indian space itself, I think a lot of businesses are probably selling off their non-core assets because it does not make business sense in pursuing that. And by selling that off, I think the management bandwidth, as well as I think the resources that you're probably applying to the core businesses, amplifies the value of the core business in a significant manner, and that improves the return ratio. So I think one goes by the basis thesis of this. I think the primary element would be the contribution factor that these businesses were probably making to the consolidated business, and B, I think the kind of cash burn that it was probably doing on the books, because any of the businesses that are doing well, I think if it is generating and pushing and pumping in cash into loss-making businesses, that probably does not imply or that does not probably improve your return ratios. So in a certain aspect, I think all these factors need to be taken into account.
Right. Yesterday we saw that for Tata Chemical as well. You think it's getting increasingly, famous that loss-making businesses that are not doing well will not be rewarded by the markets? That's why management are looking to exit those businesses?
So again, as I was just putting forth the point, I think there are two ways of looking at this. I think where the leverage on the balance sheet is too high, people are probably divesting a chunk of their stake, whether that's loss-making or their core assets as well. And you've probably seen that in a few cement companies or cement assets being sold off. Secondly, I think with businesses where the management focus itself is not there, and where Tata Chemicals management said and mentioned yesterday, I think their entire focus probably is on the consumer business and probably improving their inorganic chemicals business further as well. So I think with that respect itself, what happens with their soda ash business, the salt, gram, the pulses business, I think these are the areas of focus for the management. So I think businesses like urea probably did not fit into the scheme of things. Whatever got sold off, I think that also deleverages the balance sheet to a certain extent. So one really has to look into this perspective as well on what kind of an interest component probably comes down. And again, I think what kind of cash goes into the core business, which generates far greater ROE, into a business that is probably cash burning and where cash flows are not consistent.
Do you think that overall, just stay with us, Mayuresh. The management of Escorts is now joining us, Mr. Bharat Madan, Group CFO at Escorts Limited. Sir, congratulations on the divestment of the auto product business. Can you just take us through what has happened and how it will change for Escorts?
See, as we've been talking about in the earlier conversations also, this was one of the businesses for which we're looking for a strategic partner. And this business was actually making losses for a number of years, and I think we had taken a call to actually divest this business. So the deal which we have done now is with the Badwe Engineering Pune Group, which are a very strong player in the two-wheeler, three-wheeler and four-wheeler segment of the component play. And as a part of the deal, this is not a really business sale which is happening. This is more like an asset transfer which will happen. So on the effective date, after we get all the approvals, which is likely in the next 45 to 60 odd days, so the transaction will get consummated. So post transaction, so whatever the assets are there in the plant, equipment, inventory on the effective date will get transferred to Badwe Engineering Group. and at a fair value, so that value will get realized at that time. So with this deal, we expect to cut down on the losses.
Right. Sir, but it will be a very marginal loss that this business would be making in?
So on an annual basis, at EBIT level, we are losing about 25-24 crores money in this business. So that loss will stop now going forward from Q3 onwards, most likely.
Also, a lot of capital would get free, which means ROEs would increase?
Yeah, obviously. So they had a 55 odd crores capital employed. So it's not a very big business, like you said, but yes, whatever will be there, it will be positive only for both bottom line as well as for the other ratios.
As far as the contribution of this business is concerned, it's very less. It's into single digits on the sales front or on the volumes front.
Yes, on top line they contribute only about 2.5-3% of the top line. So about 1995 goes to the top line from this business last year. So on the bottom line they were all negative. So about 13% negative margin we are making in this business. So the negative margin will definitely become now it's a positive for the P&L. So the losses will stop.
Right. Can you just tell us that what should be the timeline that we are looking at for this deal, and post this deal, the focus of the management will only be on the core business?
That's right. So like we said, I think next 45 to 60 days, the deal should get consummated. So we're targeting 1st October as a likely date. So it will be somewhere around that. So Q3 definitely this will be through. So we'll see the results without this PAP segment now. So on the other three businesses, yes, we will continue to focus. So it's a very strong businesses which we feel we are in, both on agri equipment front as well as construction equipment and then the railway equipment front. We are seeing very good growth happening on the industry side. So that's why the decision was taken to focus more on the growing businesses rather than diverting our energies and resources on a business which we don't feel is a core to us.
Right, sir. Right, sir. Thank you so much, sir, for explaining us the entire deal. That was the management at Escort. So we were talking to Mayuresh. He's still with us. Sanjeev Basin also now joins in. Sanjeev, a view on Bank of Baroda numbers?
Yeah, I think it was weaker than what we had made out. And this is not once, if you recall, this is the second quarter, Pankaj, that they have disappointed. When Mr. Jayakumar came the 2 quarters back, he had actually promised a lot, and he has, not lived up to the reputation. I think there has been extreme weakness and slippages have only increased. So it's left a sour taste in the mouth of the investors, and these stocks had actually from their lows run up quite a bit. We had been advising that book profits in most of the PSU banks, and again now it will be a sordid tale till the economy recovers and till we see more proof in the pudding. I don't think it is worth buying any of the PSU banks now. Bank of Baroda was one of our top picks around that 125-130 level. But we will revalue the after analyzing fully the results and more coverage from the management before we review our decision on any buy call.
Right. Does this also tell us that SBI numbers may also be weak, which come out tomorrow, or it has to be taken a case by case?
Yes, Pankaj, it has to be taken case by case. In the last week, we've seen Indian Bank come out with a mind-boggling numbers. And that is what, actually triggered this whole rally or re-rating a lot of the other PSU banks. But aside from Indian Bank, there has hardly been anybody else who has, been able to match up. I just saw a glance of IDBI numbers. They seem a little bit on the better side. But for us, the key would be State Bank tomorrow and what the color they give us. So what would be the write backs, what would be the extent of NPAs, what is the slippages going forward, and what is the asset quality. All these four will be predominantly on our mind tomorrow around when the State Bank numbers come. Also, given that the rest of the PSU banks have fallen almost 20% from their highs, State Bank is still very firm around that 227, 228. So I think if there is weakness, then the stock can easily go down to levels of 210, and we would wait for the management guidance, numbers and commentary tomorrow before taking any decision.
Right. As far as commentary which you pointed out, we spoke to the management of Bank of Baroda. They seem positive that going ahead, slippages will come down. You think now it's shifted more to delivery? And what delivery does the management give rather than, only the number that the management says will be slippages going ahead?
Yeah, it is going to be execution, delivery. Like you said, the comfort is that bond yields are at a 7-year low. In fact, today bond yields have fallen below 7.1, which means accretive profit on treasury sides will be huge for State Bank and Bank of Baroda also. But where is the numbers? I mean, what has happened is, Pankaj, as a percentage, NPAs have gone up because advances have gone down. So the book has shrunk. Now, on a shrunk book, of course, this will be, it will stand out like a sore thumb. But we have to see what the guidance ahead is and what is the credit spread they are going to look at. We are seeing single-digit credit advancements. And I think if the economy has to recover, then the banks will have to be in a position to lend more. Only then will you be able to gauge what is the book going forward. And, as a percentage, that NPA provisioning should decrease quite sharply. So like I said, the stocks are not all that lucrative as far as the price goes, and we would wait for further corrections and more guidance from State Bank before initiating any buy call on that.
Right. Mayuresh, what will be your view on SBI tomorrow? More than the commentary, execution should be in focus?
Oh yes, Pankaj, and if you look at what kind of recognition has happened in Q3, Q4, and the kind of watch list that the management has presented to us, I think we're taking a front loading of the watch list in the first 4 quarters of this fiscal. And even if one accounts for a larger amount of slippages to come through, both from the standard restructured book as well as credit costing at elevated levels of around 188 bips, and that's on an annualized basis as well. Again, I think it's that tepid growth in terms of NII. It might get supported on the base that SBI works with, so the advance rate should be quite reasonable compared to the other PSU banks. But largely, I think you're probably looking at profitability still being construed because of higher provisioning taking place. Slippages still might remain high in the system. And in fact, in terms of an absolute number on GNPAs, though that might increase on a quarter-on-quarter basis, it is really the perspective that probably comes through. So I think if the cleanup process is going to take a couple of quarters or 2 quarters to say the least, for this fiscal, I think one really will assume that credit costs remaining high, advances remaining muted. Probably I think the numbers in terms of how the earnings will pan out for FY17 can be a little bit soft. So I think it will point down to how the management commentary and the execution thereof, as you're rightly pointing out, pans out.
Right. Sanjeev, what's your view on Idea? You generally, tend to look at stocks which fall down, which are not delivering, and then there are chances they will deliver. Any view on Idea Cellular? It's fallen down quite a bit after the results. Of course, numbers were not that great, but do you see it as a buying opportunity?
No, Pankaj, I don't. We are avoiding the telecoms as a whole, and we now again there is a talk of spectrum. The spectrum auction is there. Plus, there was a case again. Some case by the dot on what would be the effect of avoidance of charges which are there. So a lot of negative rhetoric is going on. Along with that, we've seen weakness across the board, whether it's the threat of Reliance Jio which will be launched, or whether it is the cost cutting which they've done as far as the data and the voice goes. So it's telling you that this is not one space which is looking very, very visible on the earnings front. Now on a valuation from 160, 170, Idea is almost half. But I don't see any reason. I think there are enough stocks and sectors where there is more visibility going into 2017 and where we would be wanting to put our bets. Also on a market which is at 86, 87, these stocks are touching new lows. So for us, this is an avoid.
Right. Sanjeev, how would you look at United Spirits? It's now at the day's high. It's almost up 5%.
So Pankaj, this has been in the eye of the storm mainly because of some rhetoric on the to and fro with the government on Diageo and the proceedings and some of the Vijay Mallya issues. I think as a brand, as a company, as a business, it's a brilliant opportunity to accumulate. We have a buy rating all the way from 2500 downwards, and we are only recommending to buy. This is a strong accumulate for us. And even though it has shown exceptional weakness, come down to 2150, we think these are very, very good levels, but you'll have to increase your time horizon. We think in the next 2 years you could even see levels of 4,500 on this stock, because the business is doing exceedingly well. You know, we are in the middle income. You are seeing increase in alcohol consumption. Secondly, the margins are much better than what was made out. And thirdly, a large part of their brand imaging is doing extremely well. So for us, United Spirits is a buy on any decline, and it's a hold with a target of 4,000 in the next 2 years. I know the timeline is extended, but you know, you can't go wrong on a company which has almost 63% of the market share, and where Diageo now is doing exceedingly well as a brand.
Right. Mayuresh, you know, United Spirits, if we just look at the numbers that they have delivered, since Diageo has, you know, taken them over, it's not been that great. There has been a lot of, you know, cleanup that has happened. Do you agree with the fact that, you know, the time they deliver numbers, people will wait, and that will be the quarter where it gets re-rated? Because it has delivered bad numbers, but, you know, there doesn't seem to be a lot of selling.
Probably, and again, as a disclaimer, I think we don't cover the stock, so no opinion on this one. But largely, I think the numbers have been all over the place for United Spirits, and what probably in terms of the premiumization factor is getting played out, that might happen. But again, I think you should be looking at numbers, and the numbers delivery is extremely important for stocks within the space. Secondly, I think what happens with GST and what kind of rate actually comes through, specifically on the sin tax, is something to be watched out for very, very keenly. So again, I think I'll be watching out for a whole amount of factors for the liquor industry as a whole. So again, I think numbers should do the talking.
Right. Sanjeev, any view on Exide? We had a big block deal a couple of days back. Any view on Exide Industries?
Yes, Pankaj, the numbers were much ahead of the street, and it is telling you that lower input costs, you know, particularly lead and nickel, have played out very well in their margin expansion. It has been on a losing streak, and Amar Raja was a big gainer on account of the reused battery. But I think Exide is back in the running, and now you know, there was this overhang of certain stock by some institutional investors. I think that is out of the way. I think, and this is one of our best players on the automobile side, as in an ancillary, and we think any decline should be an opportunity to buy. Exide has gone through the worst in the last few quarters, but the numbers now, definitely this quarter, were a standout. So for us, this continues to be a buy on any decline, and we think this could deliver at least a 30% upside in the next 1 year.
Right. And you know, the point that you made, that they delivered after a long time, do you think that when a brand like Exide starts to deliver, you know, it becomes a very consistent growing business, something that we've seen for Amara Raja and some of the others?
Surely, you know, and you have seen whether it's four-wheelers or it's two-wheelers, the auto market has been on a tear, and as yet the best to come with the festival season, the 7th pay commission money, the OROP, all that should have good tidings, mainly for the auto sector. And Exide is up and running, and you know, like I said, they've been able to control their costs very well and expand their margins, purely on the back that some of the base metals, you know, nickel and lead, have been have shown a lot of weakness, and that is what has played out well. So I think the brand was just waiting to go. There was this lull for 2-3 quarters, but last quarter was a standout, and I think the road ahead is very, very clear. That is that the stock is headed up.
Right. You know, just about a minute remaining for markets to close. I'll just come back to both of you. So markets, you know, weak in the start of 230 factor, but then recovered. That tells you that there is some ETF buying that has happened. Bank of Baroda down 10% because of results. Idea Cellular, after 2 days of decline, popping up with 2% gains. Hindalco down 2%. Results come out tomorrow. Sun Pharma down about 1%. ONGC up about 1%. ICICI Bank up 1.5%. BHEL flat with the positive bias. Adani Ports, yesterday was a big day, but today it's down 1.8%. Axis Bank 0.5% higher. BPCL up 2.3%, 597. Tata Motors as flat as it could get. Tata Power up about 0.5%. Yes Bank down about 1%. Coal India absolutely flat. Ambuja Cement no real change. Reliance Industries 1% higher, 1014. HDFC Limited 0.8% higher, 1350. Bharti Airtel 0.3%, 0.5% rather lower. Lupin up about 2%. That's the closing bell, 19 points higher for Nifty, 97.98 as far as Sensex is concerned. NTPC on your screen up 1.2, Tech Mahindra up about 0.5, C Entertainment down 2.6, Aurobindo Pharma up about 0.8. L&T 0.5% lower, 1,476. IndusInd Bank 0.8% higher, 1,168. That's the top gainer, 2.8% higher, 22,349 as far as Eicher Motor is concerned. That's a part of the top gaining list. Idea is the next one. It's up 2.8. BPCL 2.2% higher. Lupin up about 2.1. 1,577. That is BPCL. Let's look at Lupin as well. ITC is the next gainer, 2% higher. It was one of the major reasons why Nifty recovered. So 2%, 251. ICICI Bank 1.6% higher, 243 for ICICI Bank. Asian Paints up 1.4, 1,146 for Asian Paints. NTPC, TCS, HUL are some of the other gainers. As far as losers are concerned, BOB down about 9%, 145, 146 for BOB. So that was the top loser. Grasim down 6%. Z Entertainment also lost out quite a bit. Bharti Infratel, Hindalco, SBI, some of the other losers as well. Let's go back to Mayuresh as well as Sanjeev. Sanjeev, what's your view on Aditya Birla Nuvo? We've seen a lot of reports which suggest that there could be some demerger, merger that they are looking at. Do you believe that the holding discount story that you had told us about largely has played out, and now once this happened, we would be closer towards this name getting towards fair value?
Yeah, I think the stock price correction is telling you some of the disappointment which the market people will have. Grasim would be a pure manufacturing play, whereas the rest of the AB Nuvo is more on financial services, insurance and the mutual fund. So I don't think I think the merger was slightly not in what market men had in line. So I think we'll get more color from the management in the next few days. I would wait for that. But I think any decline again beyond the point would be a good entry point, because definitely the cement business, the specialty chemical and the VSF, viscose filament yarn, that business is doing exceedingly well for Grasim. And even though there will be an holding company discount, we still think Grasim should be an outright buy on most of these declines after this initial weakness is over. So levels closer to 4,500 would be a very, very good time to get into Grasim. And we would wait for more color coming from the management on the commentary and the proposed merger over the weekend.
Right. Mayuresh, how would you look at Grasim after 10-15% correction?
No, again, I think in terms of their core business verticals, the VSF business has done exceedingly well. And again, I think the perspective here is that a lot of Chinese units are actually shutting down. And again, I think that gives some amount of respite. And again, Grasim basically operates out of the specialty fiber unit. So I think the fall in crude prices probably affects the other fibers, but specialty fiber probably stands out in terms of the premiumization as a product. In terms of the utilization levels, both in terms of their VSF as well as the chemical business, with the merger of Aditya Birla Chemicals, my own sense is that the return ratios have vastly improved for Grasim. And again, I think with the Ultratech holding company discount even taken into account, the kind of expectations that one really has from the cement business as a whole, in terms of utilization levels going up, in terms of realizations probably stabilizing and firming up as demand gradually increases over the next few quarters, the premiumization that Ultratech probably receives on an EV to ton basis of close to $180, $190 odd dollars, I think that premiumization can get played out meaningfully into the markets. So again, I think Grasim becomes a wholesome story, but again, I think if there is some news or some aspects related to the restructuring of the business, I think that aspects need to be studied very, very carefully on what components actually the management comes out with, specifically with Grasim into consideration.
Right. Sanjeev, do you track Delta Corporation? It's after the results, it's up from 90 to 130 right now.
No, Pankaj, I would not have any comments. I don't track that stock, and I wouldn't be able to pass any comment on that.
Right. Just a last word, Sanjeev, on Escorts Limited. I and Mayuresh spoke about it quite extensively earlier, that they have divested their auto division. We spoke to the management as well. They said it's about 2.5% in terms of their sales and a little bit of loss making that is there right now. Do you believe it's a very big positive and deserves a 16% sort of an up move?
Yes, this company, this stock has been totally going through a total transformation in the last 1 year, and we've seen whether it's tractor sales, concentration on their core businesses, divestment of loss-making assets and divisions. Across the board, it's a thumbs up from the market, and the stock is evident. It's been a multi-bagger in the last 3 years. 60 rupee stock is what, 260. So for us, it's a win-win situation. As yet, the core assets include that if you go and revalue the assets or the land bank they own in Faridabad, that has not been reflected in the price. I still think there can be a re-rating of this stock, but it's a thumbs up because Pankaj, they are in the process of cleaning the balance sheet, redoing the company, and a full transformation is taking place. So I think it's a very big positive.
Right. Sanjeev, thank you so much. Mayuresh, always a pleasure talking to you. We have the adjusted close, 16 points half for the Nifty. We are also getting numbers coming in from Cafe Coffee Day at the bottom of your screen. 11 crores. I think last year was a loss-making number. Margins have come in at about 16.4%.